Hi, I'm Max and welcome back to the channel. Today we're going to be breaking down what exactly is going on within the craziness within the Ferrari market over the past few months. Now, I put a post out on Instagram about 2 weeks ago asking my followers what exactly do we think is going on. I got a range of responses to that post, and today I'm going to synthesize those responses and give my own view on the 10 things that I believe are contributing to this massive surge in Ferrari prices within the UK right now. The 10 things that I'm going to discuss here, I believe, haven't really been spoken about in detail yet. Now, I've seen other influencers try and address this issue and discuss the few things that they think are impacting the market. I don't think it's as simple as one or two or even three, four aspects coming together at once. I've got 10 reasons. I think it's a highly complex issue around why the market's going the way it is. Stick around to the end to see all of those 10. There are things that lots of other people haven't discussed yet, which I think are key in understanding why we're trending in this direction. Right, let's kick off then. Number one, the simple explanation. Now, the simple explanation behind all of this is that cars are, or the top end of Ferrari cars, are just significantly undervalued, especially the limited edition cars. So for example, we've had 430 Scuderias sitting at around 140 to 190 for the past 4 or 5 years. 458 Speciales were around 200 to 300 grand for a very long period, dropping below their list price and then gradually regaining traction again. And the idea that these cars have just been undervalued for a long time, I think, has a big part to play in this. So adding to this simple explanation, if you compare the UK and European or US markets, the UK has historically been super underpriced when it comes to the special models within the Ferrari range. 430 Scuderias, 458 Speciales, even Pistas, and the top end like SP1, SP2, SP3s as well. Within the US, there's more money, more buyers, more demand, and hence prices in the US have historically, or over the past 5 years or so, been a lot higher than within the UK. So over time, either we need to find some sort of equilibrium between the UK, European and US prices, or UK will catch up to the others. And what we're seeing at the moment is the UK catching up. Now, the second explanation, I think, is the supply and demand of the overall market. With the historical cars, we've got a finite supply. All of the older special edition cars were limited numbers, up to the 488 Pista, which then they produced, I think, around 3,500, correct me if I'm wrong on that. But on the older limited edition cars, there's an increasing pool of buyers, but a obviously limited or finite supply of cars. So over time, price will just go up. Simple economics. And this touches on a point that I've seen raised multiple times across many social media accounts and by other content creators, is that the buyer pool for these special edition cars from, say, late 90s to late 2000s is only growing as they are the people who have these cars on posters on their walls in their bedrooms. I mean, a great example of this is the F40. It's quite universally referred to as the poster car, which now the buyer pool is only growing for, and we've seen those prices just go astronomical over the past couple of years, actually. And now that this generation who grew up with these cars on their posters, on their walls in their bedroom, are earning their own money, coming into money, there is a greater demand for that dream poster car as a child. And I'm in that generation. I'm the one I'm now getting into the period where I'm feeling like I'm getting to a point I can start buying some of the cars that I really aspired to buy when I was young. And we'll get onto that generational tone and how we feel about things in another point. Now, point number 3 is dealer influence. Before I go into this point in more detail, I want to caveat, this is pure speculation from my perspective. I have no evidence. This is my opinion of what is going on within the dealer market in the UK. So effectively, what I believe is happening here is a small number of dealers are controlling supply or drip feeding stock onto the market, basically waiting until they've sold one car before releasing another, or colluding with other dealers to say, oh, let's wait, don't put your car on the market yet because I'm listing mine at £450,000. Don't undercut me, just wait because there's so much demand. I'll sell mine at £450,000 and then you put yours on at £450,000. I think it's similar to what happens with the diamond market globally. you hold back supply from until the demand is there. But because we have so much demand at the moment, they can just drip feed these cars onto the market, and they know they'll be snapped up at those prices. So we're not actually finding a price equilibrium. And I believe that dealers are either price fixing or colluding. Now, as I said, I'm not mentioning any specific dealers here, but I believe that this has been happening because I've seen cars that I know have been available or with dealers for a significant period being held back from the market and then waiting for a car to sell, and then they'll go online at a slightly higher price. And also what's happening here, we're in a price discovery era. So dealers are just listing at whatever they think, like plucking a figure out of thin air, just plus 50 grand on that asking price and see what happens. So while we're in this price discovery mode, we're effectively just finding where the market is. And if there's a couple of super wealthy, enthusiastic buyers here, then they'll buy these cars and dealers will just be like, okay, we'll just list ours for the same because that's where the market is, but it might not be where the market is. The other thing to note here is that you will only see what cars are listed at on Auto Trader or other platforms, not what they're actually selling for. So someone might list the Speciale for £450,000, but it might only sell for 410, 420. The next buyer who comes along doesn't necessarily know that, and they might just buy it at 450. So I think let's just take all the advertised prices with a little pinch of salt here. So when cars are just advertised at these numbers that are plucked out of thin air, and there's no real competition from other dealers or, as we've said, potential price fixing, those numbers start to stick. And then we kind of find this new normal of what prices are. Now, I don't think it is a new normal. That's my personal view. I think that this is artificially manipulated and we'll see a correction at some point. Point 4, the new Ferrari problem. Now, there are a few factors at play here. Firstly, Ferrari are releasing more special edition cars than ever, which are not limited supply. So they're just flooding the market with new cars that they can't really sell. We're seeing that with the 296 Speciale, where you can pretty much walk into a dealership and say, can I have an allocation? And they'll give you one. And the problem is, when everything is marketed as being exclusive, like the Speciale 296, nothing really is exclusive. Now, the second part of this new Ferrari problem is the tech on a lot of these cars that people just don't want. Now, I discussed this in my recent 992.2 GTS review, that there's so much tech in cars these days that it's just taking away from what the real car enthusiast wants in a vehicle. And I think this is part of the issue, especially within Ferraris. The haptic buttons on the steering wheel have had really negative reception from the general market, and they've now backtracked on those. But a lot of those newer generation cars have all that tech in that people just don't want. So there's a flood back to the 1990s to 2000s era cars, as we've talked about. The last part of this new Ferrari problem is new Ferrari's pricing. Now, again, unless you've been living under a rock, you've probably seen that new Ferraris are in excess of £500,000, which will just naturally tug or bring everything else up in line with it. You can't have a Dedici Cilindri at £500,000 and a Speciale at 250. It is not double the car. Or an 812, sorry, is a better comparison at 200 grand. It is not double the car. I think there's a real adjustment here as a result of new car prices, and potentially this could be a tactic from Ferrari to drag up the older models and keep that heritage alive. So if this is an intentional play, I think it's really, really smart. Number 5 is the financial reality or financing. Now, if you look at the numbers, financing a new Ferrari is incredibly expensive. Residuals are low because of those depreciation, the depreciation we've just talked about. And when you compare it to an older Ferrari that's holding its value relatively well, or it's already done 40-50% of its depreciation, then to finance it becomes way more affordable. So these older cars that have already stabilized in terms of residual values, holding very steady, are becoming a lot more attractive to the buyer who is looking either for an interest-only deal on their finance, So they literally just pay the deposit, pay the interest on the amount borrowed, and then have a really healthy balloon at the end, makes the interest payment very small per month. That is becoming a very popular way of financing these cars, which are appreciating as investments. So yeah, I think the prospect of losing £250,000 on a new Ferrari when you could finance something that is a few years older and get really good residual values just doesn't make sense. So that means that a lot of the market is just picking up on the older stuff. Now, point 6 is the Ferrari game. Now, I know lots of people, close friends and others in the community who've played this game for years and are getting increasingly tired of having to buy cars to get the special stuff. You can have all the money in the world and still not get the car you want because you don't have that relationship with the dealer, which I believe a lot of people are getting seriously frustrated with, especially this new generation that kind of want everything now and don't necessarily want to have to wait 4 or 5 years on a wait list to get a special edition car. And I think this just pushes more and more people into the secondary market. Now, point 7 is hype and influencers. This is something that hasn't been discussed, I don't think, by anyone else, but I think is key to what is going on at the moment and understanding the market. The new generation of buyer consumes a lot of their media through Instagram, YouTube, TikTok, all of the new media platforms where they are highly influenced by specific personalities. And I think a lot of these speculative buyers or people who are looking at cars for investments will subconsciously, maybe even consciously, go off what these social media names are saying are the next investments. So it almost becomes a self-fulfilling prophecy in terms of a social media person saying a Ferrari GT is the next £10 million car. And then people speculating on that advice, thinking that some of their audience will be in a position to buy a Ferrari GT and inflate the market. I think a lot of people underestimate the impact that social media personalities have on the top end car market because they think only children or teenagers watch YouTube, and that is just not the case. I can see from my own demographics on YouTube that my general audience is actually 40 plus. So people are watching other big automotive influencer videos, and I think that is informing buying decisions. Number 8, money rotation. Now, another factor that I don't think has been properly understood or delved into enough is the flow of money within the UK and what is going on with people buying cars as investments. Now, there's obviously been a lot of chat, or it's becoming increasingly popular to see cars as investment vehicles, but what we're not understanding is the other asset types or what is going on in the market that's thinking, oh, actually, I'll just put my money in a car and enjoy it rather than have it sat in the S&P 500 or cryptocurrency. And that's a key point that I want to pull out. I don't think others have talked about. I believe a large part of what's happened in the past 6 months has been directly correlated with a dip in crypto. We're at a point in the crypto cycles, we're obviously in a shallow bear market at the moment, where lots of people have been stacking or have gone through 2 successive cycles where they haven't necessarily got the gains that they wanted, and people are a bit sick and tired. There's a lot of fatigue with waiting for crypto to hit that 10, 50, 100x, and people are actually like, right, I haven't got to that point, I'm not sure it's going to happen, it might do in the next few years, but while we're in this crypto bear market, I'm actually going to put my money into something that I can enjoy and use. And I don't think that's been discussed at all. I know quite a few people who have taken their money out of crypto and put it in a car with the plan to keep it for the next 2 years and then put it back into crypto as the market starts to pick up again. Now, this ties into another point we're going to discuss in a minute around the geopolitical situation. Number 9, psychology and uncertainty. And then there's the bigger picture, the current global conflicts, economic pressures, what's going on in the wider world, and how it changes how people think about cars. Instead of planning long term, people start thinking short term, i.e., I don't know if I'm going to be here in 10 years, or the world might be a very different place in 10 years, so for the next 5 years or 2 years or whatever, I'm just going to spend my money and buy a nice car. I'm going to buy that Ferrari that I always wanted. If nothing feels guaranteed, then I believe people will just try and enjoy what they can now, which is a pretty bleak way to look at the world, but honestly, I think that is a contributing factor. And point 10 is the new generation. Now, as this new generation rises up and gets to a point at which they can start to afford cars, we talked about the poster cars on the walls earlier. So I believe this current millennial generation, they're in their 30s now, gradually getting to their 40s, getting into money, have a very different perspective on money and appetite to risk to like the boomer generation, for example, or older generations. I believe that millennials or even like Gen Z have had a very different life experience or understand the world in a very different way to the previous generations and are much more frivolous with their money. Now that is a massive generalization, I completely get that. But from conversations I've had, my own personal feelings as well, this is my view, is that the millennial generation will be way happier chucking 50 grand into a car if they know they can enjoy it for a bit. So I think this new generation are much more open to buying assets or seeing opportunity cost of investments to have fun with them rather than it just sit in a bank. Which is why I think there's been a massive push towards the poster cars or like the top end of the market, which is historically these limited edition Ferraris. So that was the 10 reasons why. And it's actually spreading now. It's not just within the Ferrari market. We're seeing it trickle into other limited edition cars of the kind of 2000s to 2010s era. One specific example being the McLaren 675 LT, where we're seeing prices, again, just being in a complete price discovery phase, just finding their value basically, which is pretty scary for the car enthusiast because we've dreamt of owning these cars for so long and we're being priced out of the market from pure speculation for all the reasons that I've mentioned in this video. Overall, I think this is actually really bad for the average car enthusiast. People who are saving up or aspire to own cars for their whole life and might even be like towards the end of that process have just been completely priced out of the market for some of the reasons we've mentioned, but also just because of like ridiculous price discovery by super wealthy individuals and dealers potentially manipulating the market. I think overall there's a negative impact on the average car enthusiast who aspires to own one of these cars. Now, my personal view is I don't think this is over. I think we're right in the middle of this, and the market is going to continue to move upwards over the next however long until a point at which it potentially pops. We shall see. Thanks very much for watching. Please do like, comment, subscribe if you enjoyed the video, and I'll see you next time.